Let's see how the trade is opening up here this morning on the grain markets. Let's dive right in here and take a look at this corn trade and see if we have follow-through buying from yesterday. The answer is, as we look at our December contract here on the corn, let's see, we have it up 1 tick. We are up 1/4 cent. Now we're up 3/4. There it goes. It's at 3.68 per bushel. It had a high overnight of 3.72 1/4. We have the March contract just 3/4 higher at 3.80 1/2. I want to take a moment right here, and the September contracts on all these grain commodities here, say farewell to them today because it's the last trading day. They go off the board today. On the soybean trade, let's take a look here at soybeans and see how they are holding up. We have November now 3 3/4 higher at 8.99 1/4. Got within 1 tick of $9 and could not quite clear it. January up 3 1/2 at 9.12 1/2. And moving on to our wheat trade to start things out today in Chicago, we have December 3 higher at 4.86 3/4. And in Kansas City this morning, we have the December about 3 1/4 higher now at 4.06 3/4. That would still be about 3 cents off of its high from overnight, right in the middle of our trading range so far. And Minneapolis wheat also on the December contract is now just trading fractionally higher this morning, up about 1/2 cent to a penny. So not a lot going on. Excuse me. Let's go to the phone and welcome Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. And boy, after that big day we had yesterday, I imagine a lot of folks are just kind of trying to catch their breath here today.
Yeah, we don't have a lot of fresh news, Marlon, either. You know, we saw a little follow-through buying in the morning hours, a little bit here this morning, but we're coming off of our morning session highs in corn and the wheat market. Those are markets that may find a little bit of advanced selling. There's probably not a lot of traders want to go into the weekend short soybeans, however, so I would think they would be fairly strong. But I think the real takeaway from this entire week is that we have outside weekly reversals going on some of these charts. December corn did make new lows for the week earlier this week, and now we're making new highs, and a higher close this week certainly looks imminent. And that's usually how you put a bottom in a market, is when you have a weekly reversal, you know, either to the upside or the downside. That usually is your pretty good indication that we've exhausted all the selling that we're going to see, and prices should be trying to move higher after this.
How confident are you in that then with that kind of a signal?
Well, you know, this is one of the more reliable indicators. You know, I don't really rely on technicals that much, but this is one of those indicators that you really want to pay attention to. If you go all the way back to May 17th, that's when we put a low in the corn market and then rallied that week and really launched our rally into the spring and summer months. That was because of weekly reversals had scored. And it usually happens at an extreme when you get a lot of funds either on the long side or on the short side pushing the wrong way. And you get that type of reversal, it's a pretty good indication to them that they need to reverse course. And that's what gives you a big price move. And hopefully we'll see something like that here in the corn and soybean markets.
Do you have any harvest going on in your part of the country yet?
Yeah, there's been some activity, and you know, it's kind of mixed so far. A lot of the silage that's been cut has been disappointing around here and up in Iowa. It's been much worse than what they expected, but that doesn't necessarily translate well into corn yields. But USDA did tell us that the crops are going to shrink just a little bit from their previous numbers. But boy, these numbers that they told us yesterday, pretty much in line with private analyst estimates that came out based off of their client surveys. So this crop probably is not the disaster that we had originally feared back in May and June when we were trying to plan it.
All right, just wanted to mention also, recall yesterday in the cotton, we had a limit up for share of the day, and it closed up like 280 points. It's up 101 points again now on that December contract, and back over, let's see, what do we have, 63.23, I believe, for the last trade. We'll come back in a moment, and Brian, we'll take a look at how we're opening up in the livestock trade. Lots of excitement there this week, and we'll talk about it when we come back. Looking now at our livestock trade here on a Friday the 13th. Let's see how we're opening up and on live cattle right now. Let's take a look at the big board. We have a split decision. Nearbys are stronger. Deferreds are a little weaker. We have the October live cattle up 65 at 99.38 and December 52 higher at 105.47. The deferreds about 15 to 17 lower, make it 10 to 13 lower from April on out. Looking at the feeder cattle market as we get things rolling on a Friday, we have September down 32, but October is now 35 higher at 134.85. And now you have the November up a dime at 134 even, kind of in the middle of its trading range today. And then the lean hogs, everybody wondering what they were going to do today. Well, did we have follow through? I would say yes. We have December now $4.50 higher. So we are in expanded limit mode today, of course, with all the contracts going up $3 yesterday on the close. October is up $2.92 at 66.10, so it is trading, but December lock limit up now $4.50 higher. February up 4.25 at 74.85. Brian Hoops rejoins us. He's with Midwest Market Solutions, and wow, that's a long ways from where we were here just 2 days ago, Brian.
Yeah, we've had a real big move here in the cattle and the hogs the last several sessions. This is the fourth consecutive day where the cattle markets really started to rally. We may be getting to a point where we're running into a little resistance and equilibrium to the cash markets in the Southern Plains, so our rally may start to stall out, but the hogs certainly on fire, and that'll be supportive to the cattle market as we're lock limit right now in those December hogs. We talked about outside weeks in corn and beans. There are some cattle contracts and some hog contracts that are doing the same technical action where they've reversed course and put in some lows this week, and now are making new highs to end the week.
I would imagine we have a little bit of cash cattle activity to clean up yet this week. I don't think we've seen everything yet. It's probably going to be dragging that cash market quite a bit higher, isn't it?
I would have to think so. If you're a feedlot, you've got to be looking at this board price over the last 4 days and these big packer margins, thinking you've got to have some of this cash markets put in your pocket as well. It's been a strong week for futures. Packers have a lot of margins to work with. I think you're holding out for steady, at least, if not higher money.
All right, well, thanks, Brian, for talking with us. Brian happens to be with Midwest Market Solutions. He's in Springfield, Missouri. Always good to talk with Brian Hoops. Let's take a look at some slaughter cow numbers provided by Ed Serwin of CZ Cattle Market Analytics. He's in Amarillo, Texas. Now, looking at the action in 20 different auction markets, we had about 6,700 receipts last week. That was up quite a bit from the week before when we only had 3,500. The utility cows were bringing anywhere from $47 to $62. That would have been down about $5 on the lower end of that trading range. The cutter cows, 44 to 59 last week, and that was down $4 on the lower end, only down $1 on the top end. As far as the dairy cows go, let's take a look over there. We had the dairy utility cows, $50 to $62. That would be down $1 on the lower end, down a couple on the upper end. On the cutter type dairy cows, 40 to 57. That would be steady on the upper end of the range, but down about $3 on the lower end. The cow cutouts were 175.61. 90% trimming is quoted at 224.40 this past week. Thanks to Ed Serwin.
Always. He gives us such great information.
Yep.
Thank you, Marlon.